So, welcome everybody. This is Boris Schlossberg from BK Forex Advisor, and it's good to be with you. Glad you guys came into the room to hang out with us today on the first Monday of the week here with the first trading day of the week with, of course, the euro doing its usual zig and zag as we try to figure out what the hell is going on in the eurozone. Before I start, I just want to, for those of you who are new, I'm going to give you a couple of resources to take a look at so that you're well familiar with the whole BK family of products and ideas. And as a trader, you'll be able to get some really, I think, interesting ideas. First of all, this is our website, bkforexadvisor.com. It is a signal service. We've done very well. We've been positive for 3 years in a row. By the way, I just read, this has nothing to do with FX, but I just read that for a stock manager, for somebody who manages stocks, to beat the index 3 years in a row, you can only do that if you're in the top 10%. That means 90% of the people who professionally manage money cannot beat the index 3 years in a row. And we've done that with BK against the Barclays Hedge Fund Index. So even though it's a little bit of apples to oranges because we're comparing FX to stocks, I thought that was kind of an interesting little statistics for those of you who are interested in looking for signals. This is our website. Obviously, you can sign up and join on the website, but there's a lot of stuff here that's free, and that's why I wanted to introduce you to it. In addition to obviously having all the subscriber stuff behind the firewall, every single week, I publish a column, which you guys may find amusing. It's usually sort of a riff on trading, and there's lots of them. I've done probably about 200 or 300 columns, and they're all saved there. So you can look at various columns that I've written over the time frame. Here's all my various posts. So you can here's all my posts that I've ever written. And I think you'll find a lot of them quite interesting. This one has especially received a lot of interest in terms of those people who trade, found this to be very, very valuable. Kathy publishes a blog, and a lot of it gets syndicated. She's got her own blog at kathleen.com, but all of her blogging gets syndicated, and obviously there's a lot of interesting information that she puts out on her blog that's also over here. And then last but not least, we have a YouTube channel. I hope you guys can see this, right? Everybody can see the YouTube channel. I just want to see this. It's at BK Trader FX, and there are literally like 100 videos on here of various things that I've put up that I think you'll find very, very valuable. So a lot of the stuff that I go through here today can actually be found on the YouTube channel for you guys to explore and examine. And I hope you find this information useful as we stand. Now, I'm just actually watching prices right now because obviously we're getting very, very strong risk flows here. The latest news out of the eurozone is that they're going to lever the EFSF to about $1.4 trillion. So that's obviously going to be very, very positive for risk in a sense that that's a credible number. That's a number that's respectable in size, and the markets are obviously are reacting positively to this news, although the overall picture looks kind of very murky because, as you saw today, the economic news in the eurozone was really, really very, very tepid. We had very weak PMI. It suggests that we could be on the verge of a recession. And basically, the bullish argument right now, the reason to be bullish risk right now, is that everything will be solved by the EFSF. They'll stopgap the sovereign debt risk for the next couple of months. And then when that sort of pressure recedes, the rest of the economy is going to pick up. You guys don't hear the sound? Are you guys hearing me okay? Yeah, okay. All right. Somebody who's not hearing sound, okay. All right. Okay. Somebody wanted to see the specific commentary pages for Kathy. So if you go to Kathy, right, this is right off BK Forex Advisor. And you go see all posts to Kathy right over here, right? You can just click that and you will get all the posts that Kathy makes over here. Okay. All right. And if you want to see mine, just go to see all posts by Boris. You get all of my posts, and obviously, if you want to go to the channel, to the YouTube channel, it's right here. It's had over 400,000 views, so you know, a lot of people really enjoy it. Okay. All right, guys. So what else can I tell you? Oh, one other resource that, of course, a lot of you know about. And actually, this is interesting. I'm going to show you two things. This is our private Twitter feed, right? This is not a Twitter feed that I allow anybody to see. This is our private Twitter feed where we do the flow trades that I'm going to show you today in private on a day-to-day basis. And obviously, as you can see, we've had very good. Last week we had 170 pips. And today we already banked 25 pips on the euro trade. But I also keep a public Twitter feed. For those of you who have not followed me, it's at FX Flow. And those of you who want to see my FX Flow tweet, where I tweet very, very actively, right? Thank you. Where I tweet very, very actively all day long, starting from around 3 o'clock New York time till, you know, all the way through the Asia session, and I just come back on. I obviously pick up pace at like, you know, between Europe and New York, and then I slow down into the New York close and do a little bit of Asia, and then I go to sleep, and then I pick back up. So there's a lot of stuff that you can always find, you know, on my Twitter feed, both links that I think are interesting, plus a lot of just, you know, run-of-the-mill commentary. And, you know, one of the things that you saw here, you can really see a lot of trade ideas that I pretty much suggest, even though I don't necessarily explicitly say them like I do in my private Twitter feed. So we have no echo data on North American calendar today, right? But we have to see how the S&P trades in view of the resolution from EU. And obviously, we had more resolution from the EU. That created positive flow. That obviously moved the euro much more into the positive territory. So you will get a lot of interesting ideas if you just simply follow me. The other thing that's kind of very cool for those of you who follow me, see who I follow, because I actually, where's my things? If you go into who I am following, you know, as far as as the people that I follow, you find a lot of really good resources. Aside from just, you know, my own private personal resources, you find a lot of really good resources for FX inside these links. So if you're looking to build a quality Twitter feed for yourself, you should follow the people that I follow because they're really, really good. Alex Baldwin, obviously just for amusement because he's really hilarious. The guy just tweets endlessly. The only person I know who tweets more than I do is Alex Baldwin at this point. Anyways, before I begin talking to you a little bit about flow, any questions about BK, YouTube, Twitter? I am open to anything you guys have to ask me at this point on any of those resources, and then we can start talking a little bit about flow. Any questions, guys? Show us the flow. I'll show you the flow. Don't worry. It's coming. Flow is easy. Trading is hard. So, BK Forex Advisor, BK Trader FX on YouTube, and Twitter FX Flow. You have all those resources. Anybody not follow me on Twitter in this room? Everybody follows me? Okay. Rob is asking why FX Spot, not futures. Because FX Spot is much more liquid, much more diverse, a much better trade. That's why. Because FX Spot is a much bigger market than FX futures. If you get my newsletters, you should really, you know, get on Twitter. I don't really waste your time when I'm tweeting. I'm pretty much tweeting interesting stuff. Blakey, what do you mean too scalpified? What does that mean? Oh, my tweets are too short term? Is that what you're saying? Well, that's true because because I'm basically producing colored commentary throughout the day. That's true. That's true. Arechi is asking me, how do I manage to trade, tweet, do webinars, blogs, and all that stuff? I have 1, 2, 3, 4, 5, 6, 7 computers in front of me, 2 different trading accounts, and 2 different phones, and 3 different internet connections. Does that answer your question? I kind of multitask. The membership is, we're actually running a super special here, which I'm not going to run for much longer. So this is really, if you go, yeah, I'll post this link for you guys. The usual membership is $199, but we have like a 99 trial basis where the first month is 99. If you don't like it, you can always cancel it, and it's $199 afterwards. And then we have a super deal where the usual week annual is $17.25, and it's $9.99 a year. So it's a very good deal for anybody who wants to try it out. Okay, so the infomercial is over. You guys seen all of our stuff. You guys know what I do, right? Let's see if somebody mentioned to me. See, this is interesting. It's actually Matty, who's one of my technical analysts at FX360. He's talking about trading caddy to parity. And one of the things I'm going to talk about is what is it that I trade flow on. Oops. All right. So let's just do this. Now I gotta change application. So bear with me. Now we're gonna get serious. Any more questions, by the way? Let's just kill any more like general questions. Anything you guys want to ask me, just sort of general about trading? Because now I want to talk a little bit about flow. My trades are really not scalps, Boyke, because I'll show you. They can last as long as scalps are something that lasts for 5 or 6 minutes. My trades can last sometimes 5, 6 hours. It's really sort of intermediate day trades, because I can't do scalps. It's just too much. I mean, I have done it 1,000 times. I've done 200-300 trades a day, but it's just ridiculous. I find that it's actually a complete waste of time. You just pick. You got to have a little bit of a directionality view, and then just go with it. You are getting squeezed, by the way, up the wazoo right now. Up the wazoo. Okay. All right, so let's get serious here. Bear with me. I'm just going to try and get this right here. Okay. Okay, do you guys see the euro-dollar chart? Everybody see the euro-dollar chart now? Okay, super. But yeah, actually, it's a good question. I sleep crazy hours. I work European hours out of New York, so basically I sleep from 9:30 at night till about 2 o'clock in the morning, and then I take a nap at around 12 noon to about 1 p.m. If I don't nap, I die. So that's kind of how I basically live. Philip is talking about the fact that the scalp these days can be defined as 10 to 30 pips, which is probably right. As you see, my scalp trades are a little longer than that, and I'm going to show you today the cool stuff that we're doing in BK right now. Right now, I'm actually my office is our office is in Jersey City, but I'm actually right now in my house because I'm broadcasting, for the webinar. I didn't want to be in the office today because I didn't want to bother Kathy. But yeah, we have an office in Jersey City, right across the river from New York. Even though I live in New York, so Kathy and I both do reverse commutes to Jersey. I have 2 kids, Boyke. I am a single dad, so I may be single, but I'm not that single, trust me. Okay. So let's review the key principles of flow and why I like to trade that particular style of trading. Flow basically refers to a very, very simple idea that an object in motion is generally going to stay in that motion. It's the idea of applying the principles of physics to the principles of psychology to the principles of trading. It's buying breakouts, buying highs, selling lows, which is something that most retail traders absolutely hate to do because they feel like they're chasing price and they're late to the game and they're going to get stopped out and all of those things that we hear all the time. When in fact, over and over and over and over again, we see that is the trade that works. That is a trade that actually creates the profitable opportunities, right? So just bear with me here, guys, one sec. Okay. So now, no. And, okay, I'm going to make a rule here. Nobody's going to ask me any in-the-moment trading ideas. I'm not going to give any trading signals right now because I just want to explain the process. It's much better if you understand the process than if you just understand one single trade that happens in real time right now. The process is very simple. What I basically try and do is try to catch the movement from the 50-yard line, from the 50-point line to the 0-0 line, to the 0-0 line. I try to catch that movement in the euro-dollar primarily, and I try to catch it between the hours of, this is all New York time, 4 in the morning to around 12 noon, the prime trading hours in the currency market. Okay? So there are 100 different ways to approach this strategy. And the principal idea that I have is that the price must move 50 points from the 0-0 to the 50 before I get interested. And then I want to try and see if I can capture the next 50 points to the 0-0. Now, why do I trade the 50 to the 0-0 instead of, let's say, from the 0-0 to the 50? And frankly, it's a small, but I think a significant difference. And the reason is this. Psychologically, people like to run numbers towards the 0-0 line. Now, that's not the only reason prices are going to go up. In fact, it's not even the primary reason the prices are going to go up. It's just simply an underlying technical support. I think one of the most important things that people who trade flow need to understand is that just because it's crossed the 50 line doesn't mean it's predetermined to go over the 0-0 line or that there's some kind of a mysterious force that's going to drive it. The reason it's going to happen is because we already have some sort of an underlying fundamental driver in the market. And as we get close to the 0-0 level, where a lot of people leave their stops, the technical force drives people to want to see if they could go and take out those positions at those levels. And at the same time, this is kind of interesting, the technical force also has people defending that level with all their might. Because remember, a lot of people leave their stops right around the 0-0 level. So if you can trigger those stops, you obviously are in a good position. And if you can defend against those stops, you're also going to be in a good position because you're going to get movement back. I'm going to show you how both of those triggers and defenses worked well today. Anyways, that's the underlying reason. It's the key reason why things move in the currency market has nothing to do with charts, has nothing to do with price dynamics, has everything to do with news. It is a story-driven market, which is why it's so hard to trade, because the story changes on a dime. That's why moving averages, Bollinger Bands, MACDs, all the crap that everybody teaches you, I don't. I don't trade it because it's all useless in my opinion, because technical indicators are simply an overlay on price, and they don't drive price. What drives price is news. Now, where do I watch news from? I watch news from every source, but basically my primary sources of news are CNBC Global. I have a subscription to CNBC Global, which means I watch CNBC Asia and CNBC Europe and CNBC US, because I'm basically looking for headline news. I watch the Dow Jones Newswire off the GFT Dealbook platform, and I watch the Twitter feeds where everybody disseminates information all the time. Remember, it's not that you need to be first to the news. What you need to be is the most intelligent in analyzing the news, right? So we know that today the big news story of the last few days, of course, the last few weeks, has been the EU summit. And within that EU summit, the big news story is, are they going to come up with a big enough number to push back the shorts in the sovereign debt market, because that's the key thing that's going to support the euro, right? So up to this morning, we had a lot of uncertainty because they haven't come up with any kind of meaningful resolution from the EU summit. And compounded to that, we had really bad economic data suggesting that, that the eurozone is going into the tank, that it's going into a recession. So when you start out this morning, initially we had a big burst. In Asia, we had positive PMI data out of China, and this convinced people that Chinese are not going into what's called not a double dip recession, but sort of a hard landing. The Chinese were actually going to engineer a soft landing of their economy, and that of course created a lot of positive risk into early Europe. But then when the numbers in Europe came out and there was no additional news out of the EU summit, all this disappointment came in, and we had a move from 39.50 all the way to 39, and then a break of the 38.50s, right? And this is where I got short. I got short with 2 units of my trade, 2 lots. And this is what I want to show you. Philip, I don't know what, this is my webinar. Why don't you, when Kathy does her webinar, why don't you ask her what she does for her trades, okay? I'm teaching you what I do right now. I got short 2 units of the move because we had a move from the 00 to the 50-point move, right? Negative news, blah, 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 into the European hours. And here's the innovation that I did that is really helping our flow trades. Before, we used to trade 2 types of flow trades. We used to trade where we get short the 50s, get out at, plus 25, and then try to, and get another unit short at around 65, try to go for the 00 level, right? Now, I've changed that methodology, and now I get short 2 units of the 50s. And what I try and do is, when the price goes to 25, like it did over here, right? It went to 25. We take 1 unit off, and then we take the other unit, we go to break even. I put my stop back to break even, and this has actually helped tremendously because what it's done is, if there is no continuation, I've banked 25 points, and I haven't lost any money on the second position, right? So now I'm plus 25 on a trade, and when the trade turned around on me, I wasn't hurt. Before, I would make money on the first trade, but I would lose money on the second trade, and I would get hurt. My payoff ratio became much better. Secondly, by taking 2 positions at the 50 level, if things go well, if it goes all the way down to 00, I have a great payoff ratio. I have a ratio of plus 75 against a minus 100. That's still a negative risk return ratio, but remember, this is a trade that backtests to 70% positive. So if I only have a minor negative risk reward with a 70% positive, I am, swimming in gravy. So this was the trade today so far that we had set up, where we were trading the 35.50 all the way down to 3900. Now the situation has completely reversed itself, right? We're actually close to possibly taking a second trade at 39.50 over here, taking a new trade, trying to gun it all the way up to 140. We are very mercenary. We don't care about being right. We only care about making money, doing the right things in the marketplace. So right now the market tone has completely reversed itself, right? The Europeans came back with a really strong proposition. The market feels good. U.S. data seems to be good. U.S. stocks are rising. Let me just see where the U.S. stocks are actually, so I can just tell you how far. Yeah, we're up like 94 on the Dow. We're trading 11. We're almost trading shit. We're almost trading 11. We're trading 11.9, almost 12,000 on the Dow. That's all very, very bullish risk, and that's creating a lot of upward momentum towards the 39.50 to move ourselves up. So we may be able to trigger a trade here if it's before 12 noon. We don't trade after 12 noon because I find that the highest probability trades are between the highest liquidity hours. It doesn't mean that you can't. It doesn't mean those trades don't work afternoon. They do. It's just that what I try and do is just pick the best possible pair during the best possible time frame, which for me is euro dollar between 4 and 12 noon U.S. time. You can trade Aussie dollar very effectively on this thing. You could trade pound dollar sometimes very effectively on this thing. It doesn't mean that you can need to be constrained just a single one currency pair. What I'm trying to do is just to be constrained to the best possible currency pair that I find. Yes, that is my main trading strategy. It is pretty easy. It is pretty beautiful. Show you a couple of trades that we did on Friday. You can see that let me show you the trades on Friday. So this is 4. We're going to do this to sorry, delete this. Let me just delete this. This is 4 to 12 noon on Friday. Talk about being mercenary, right? We got short, excuse me, we got long 37.50 here for a run to 3,700, right? 3,800. And then we got long the 38.50s. This was a killer. This was really a killer. The price went to 1/2 pip away from 3,900 and then came all the way back down. I simply took us out. I took us out right over here because it was Friday and it was the end of it. But the point is, this trade could have been plus 150. It turned out to be plus 100 because it just missed the point of hitting the 00 level. Now, I just want to show you the trade that I did today, not in the euro, but in the pound, and show you the importance of these 00 levels. This is the pound, right? And I was short the pound because obviously we had, negative news early in the morning. I'm short the pound here. The pound comes in to look at the point here. 000. It's 99 bid, but it wasn't 00 offer. And the level got defended. So my point is that sometimes you're just going to miss it by 1/2 pip, by a point a pip. And if you're trading this on a sort of a more discretionary level, you can certainly take your position points within 1 or 2 points of the target. I try to stay very, very disciplined and try to see if I can hit my targets, even if it's painful to within a 1/2 pip. Obviously, the best way to trade this is on platforms where the spreads are very tight and you get very good execution. But my point is that this is a structure. It's a guideline. It allows you to have a lot of flexibility of how you want to trade it. You can trade it halfway. You can trade it trailing it. You can trade it with a fixed trail. You can do a million different things that work or don't work, or that make it more viable for you as a trading methodology. My whole key point is that I have a lot of confidence that it's going to be relatively accurate at about 70%. That I try to make a 75 to 100% risk profile, so I have relatively favorite payouts, and I don't look at any single trade or even any 10 trades as a determinant of whether this is successful or not. I'm basically trying just to be as faithful to the strategy as possibly can. So that's the strategy in a nutshell, and that's the new modification of the strategy where we basically move the stops to break even and try to squeeze the other 50 points on the rest of the move. Leon, you're absolutely correct that institutional trading desks do hit it. I actually have an institutional trading platform, and I got hit on my on this trade that I showed you on Friday, the 39, the move to the 39, and on the retail it just missed. Yeah, right here. I got hit right over here, and it just missed on retail. So yes. I mean, in a perfect world, you should really be trading, with an institutional trading platform because you get tighter spreads. But honestly, listen, it's like 1 out of 10 type of event, 1 out of 10 type of event. So sometimes, you miss it, but most of the time it really doesn't matter. If it's going to go, it's going to go. I don't comment on FXCM's platform because they were a former employer of mine, but let's just say they really suck. I don't really trade them. We generally, at BK, we're platform agnostic, but as all of you know, we trade all of our BK trades and all of the BK flow trades on the GFT platform, and it's rock solid. It's actually great. And for anybody, the kind of trades that we do, the GFT platform is probably the best platform you can find. Why don't I use GFT charts? I do use GFT charts on the platform. I really love these charts, which are IntelliCharts. They're actually a third-party vendor to GFT. They're very, very easy to use, and I've just been using them forever, so I really love using them. So, Mike, as I said, I don't recommend anybody, because we try to stay broker neutral at BK, but we trade all of our trades through GFT. So because they have the least amount of slippage, they have the steadiest spreads, and they have the best execution. No, I don't automate my strategy, because I really don't believe in automated strategies. I believe that you must have a certain amount of discretion when you trade. I believe in model-driven strategies, but not automated strategies. In other words, I want to stick to a model, and I want to stick to a trading plan, but I want to have the human discretion to understand what's really going on. Because there are times in the market where you just don't want to put down these trades. There are times in the market where there's so much volatility, there's so much uncertainty, that you just don't, that it's not worth it to assume the risk. And the computer never knows what those times are. The computer will blindly, buy stuff for you in a 200-point volatility spike, and just take a lot of unnecessary risk in terms of doing what you do. Okay, so let's take a few questions here. First of all, my risk reward is 1 to 2 on the trade, and on the first half of the trade. Let's just so you understand this, right? The risk reward in a classic move like this, right? Let's just give you let's say the one that was the pure move here. So I'm long 37.50, out at 37.75. This is actually a bad example because this stops me out. I'm trying to show you. Or maybe not. Maybe not. No. Yeah. Okay. Sorry. So yeah, I'm long 37.50 to 37.75. This comes back, but does not stop me out. Trust me, on the charts, this was not 0.50. This was like 51 in the bid. So it did not stop me out. And I'm actually 1 to 1 in the second piece of it. So when you have a blended return, what you're trying to do is basically 3/4 to 1. That's your ideal blended return when you're trying to trade this thing. Okay. I don't know where the euro is going to be 130 or 140. I think 140 obviously is going to be a pretty tough channel to break. And I think unless we get sort of super positive news and and everybody thinks that this will solve everybody's problems, it's going to be difficult, I think, for the euro to break the 140 with conviction and remain up there, especially if the data out of the eurozone continues to deteriorate. This is a critical thing. There are a lot of people now talking about the fact that because the data is starting to deteriorate, the ECB may come in and lower interest rates, and the lower interest rates will definitely hurt the euro. So for those reasons, I think the risk is much more to the upside than it is to the downside. Let's take a look at the euro on a daily basis, right? Let's take a look at this on a daily basis, and I'll show you why I'm a little dubious about this rally. So let's get rid of all my charts. So this is the 140 level, right, on a daily basis. I mean, this looks very good. I mean, we made it like a V bottom, right? But we're coming into this whole zone of resistance here. This was the former zone of support. It broke, and now support becomes resistance. Classical technical analysis. So can it break 140? Absolutely. Can it break 140, 150? I think that's a big push. So this is the zone where if it does trade up here, I think it's going to find a lot of sellers, and we're probably, at the very least, they're going to try and see if they can push it back down to the 3800s before they try to turn it around. But it's hard. This is the reason why I don't try to predict long term. I try to basically stay on a very much shorter term basis because I try to understand what the intraday story is and capture the intraday pips, because it's very, very difficult to understand the longer day story, the intra-week story, since it can change so quickly and so suddenly. For the time being, obviously, we're positive risk, but even as we speak, we don't know if by the end of the day, this rally is going to fizzle, right? We're all going to be watching this with a lot of interest. Intervention of Asian central banks mean for their exports? Well, let's take a look at the yen. I mean, because the yen is obviously ridiculously overbought right now, and the yen continues to make these very dangerous new highs at dollar yen. Now, I may be completely wrong, but I really believe that I don't think the BOJ is going to allow dollar yen to come down to the 75 level. Oops, sorry. Come down to the 75 level. I just think that it's going to be, let me just see if I can modify the y-axis. Does this work? No, that's not what I want. I want this. Well, it's not showing me. It's not taking me down to the 75 level. Anyways, I think it's going to come in and there it is. Start doing intervention at this level, because it simply cannot afford to have the yen this strong at this period of time. And I think what you're going to see is this kind of a formation. You may have a big burst, and maybe it'll take another couple of weeks for it to settle down. But my point is, I don't want to be a seller here. I may be wrong, and there could be a push all the way to 75 and lower. But I do think they're going to come in, and when they come in, it's going to be a 200-300 point move to the upside. So I'd rather be a buyer in any kind of a dip here, or more importantly, if you don't want to try to sort of figure out where the bottom is, I'd rather be a buyer at 76.50. If we start racing to 76.50, I'd rather be a buyer here on a possible breakout higher on a turn of trend. So that's just how I'm viewing dollar yen at this point. Has it ever happened that not following rules hindered your otherwise statistical results? All the time. If I break my rules all the time, and I screw up my trading all the time. Which, by the way, actually brings me up to a very, very good point. How do you trade with discipline? And I think most people think that you just simply have to be strong and tough and mentally prepared and blah, 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 blah. And I think that's absolute nonsense. I don't think anybody can trade with discipline. You will always be susceptible to what I call market seduction, right? To whatever price is doing, to want to do something. So I actually believe the only reasonable way to run money in the currency market is to have two accounts. One account that's a complete garbage account where you are not responsible to anybody. You can do whatever the hell you want. Average down 5 times into a position. Average up. Pull your stops. Buy randomly. Feel like buying, feel like selling, have no legitimate reason for what you want to do. Basically be as creative and as free flow as possible. Allow all your demons to run wild. And obviously trade small size, right? I mean, I'm not arguing that you should trade large size, but basically this should be your game account where and the thing is, it cannot be a demo account because it's like kissing your sister. You cannot get the same kind of market intensity if you're not trading real money. So the key thing is to trade real money, but basically to trade for nickels and dimes. Just to trade, I basically trade mini lots with a small account. And then have a second account, which is your serious account, where the only trades you take are the ones that are in concurrence with your model. Now, this is my own solution. Obviously, everybody is different, but I find that's the only way I can really kind of stay in the market, which is that I let my demons blow off in a BS account, and I keep the mistress account. That's a perfect description for this. The mistress account. Exactly. I think it sort of very accurately describes exactly what I'm trying to get at. And yes, different brokers, different accounts, and obviously, my serious account is on institutional spreads, and I trade it very tight. And it's really incredible because obviously, one of the things that I've seen is that the serious account now is starting to really trade well. It's doing what it's supposed to do because I don't do stupid things in it. And of course, the stupid account, the only rule I have in the stupid account, the only goal I have in the stupid account is to try to stay alive as long as possible. The whole function here is not to blow all your money in a single day or in a single week or in a single month. It's like you're going to blow the money, you're going to try and get it back. Blow the money, try to get it back. It's just, you basically your gambler's anonymous account, because there's so much gambling impulse in what we do, because it's by definition speculation. It's by definition unknown. It's by definition has a huge amount of unknown risk. That impulse must be given rein. So I try to give impulse rein within a small account, and I try to keep my, and then I try to keep that account alive. It's basically the whole function of that account is to keep it alive. And I try to trade seriously in the other account that is much more, that's much bigger and also obviously much more stable. So I hope that helps you guys. That's my final trick of the day. If you guys have any other questions, I'll be happy to answer them. Yeah. Now, the other great thing about having a mistress account, Philip, is that it helps you overcome fear. You see, the interesting thing about having a bad account is that you actually learn how to take good trades in it, right? Because one of the key things that all of us as traders have as a problem is that we have a good setup, but we're afraid to take that setup, right? But if you have a BS account, you're afraid of nothing. So you actually learn how to take a good that proper setup in the bad account, and then you'll be able to transfer that behavior to your proper account and take it when time comes. So it's not just that it gives freedom to all of your bad impulses. It actually gives freedom to some good behavioral characteristics that hopefully you can use. Yeah, that's exactly it. I use micros. I do not take daily or weekly periods for directional bias, and the reason why is because, again, I find it extraordinarily hard to forecast long term, and because I've seen a tremendous amount of statistical data that basically shows that after 72 hours, after 48 hours, prices become almost random, and after 72 hours, they become completely random in the FX market. It's like weather. Ask me what the weather's going to be like on Sunday. I have no clue. But do I have a strong confidence that, given the fact today is kind of sunny and it's pretty pleasant, that it's going to be nice the rest of the day? Yeah, I'm going to be long the sun in New York City for the rest of the day. The reason why you don't trade a demo is because you never ever going to have the proper feeling of disdain and disgust for yourself on a demo account. Like, even if you lose a little bit of money, but it's real money, you need to have that feeling. That's why you need to trade with real money. It's just like, if you have one demo account where you fool around and then you have a real account, what happens is that real account will eventually become your impulse account. My point is, you cannot trade impulse with demo dollars. You will, because you will eventually transfer bad habits into your real account. I want to just basically contain the bad habits, on my side here. So we're blowing up big time, as everybody can see here. Risk all the way, 30-50, almost, to the upside, as everybody feeling good that the Europeans are going to be doing something good. And tomorrow is going to unwind completely if we have bad news coming out of there. So this is why the last thing I can leave you with is to understand that the currency market is a sentiment market. Don't take it personally. Don't get frustrated. And certainly do not think that what happens now is going to happen tomorrow or the opposite. You have to just accept it for what it is and not try to assert your own philosophical opinion onto the market. I don't use options to hedge my positions. No, to hedge my positions, no. Because, option, whether you use a stop or whether you use an option, you're still paying a price. You're still paying a cost of doing business. So I prefer for my cost of doing business to be nice and clean, to be stops. Because I statistically know what they're supposed to be. I know my payout ratios. I know what I'm trying to do. And if I have halfway decent intelligence and analytical capability, I should have a better edge. That's of course a big tall lift. And there are plenty of days where you guys follow me on Twitter where I am, wrong as can be. but a lot of times I'm also right. That's the nature of the game. Any other questions, guys? No, I don't use any other technical indicators. Talon, I do not use any other technical indicators. My stop loss is 50 points. As I said, if you guys, do you want me to go over this setup again? Right? So here's Euro-dollar 1 day. So the trade that we did here, I'm short 37.50. Oops, where is it? Why is this not working? Oh. Okay. So short 38.50 with a stop at 39. Once the first half of the thing hits at 38.25, I move the stop to 38.50, and I protect myself. As you can see, it was a pretty smart protection, because if I had stayed in this trade, I would have gotten myself killed. I don't trail actively. I just let it stay and try to get it to come in, because the whole idea is to make the 50 points on the second piece, so you have 75 total. I don't add to my positions. No, I don't do anything. I don't do anything fancy. It's just 2 trades, 1 move at a stop. That's it. Now I will do a lot of different stupid things in my mistress account, but not on my real account. No. Yeah, it has to do a lot with a short squeeze, because everybody and their mother was convinced that that the EU will do nothing. That also, there's a huge amount of people who are short the euro. People like me going, this is ridiculous. 140 is a ridiculous price. Everybody looking at the chart saying this is overbought. Clearly, I want to come in and short it over here. So yeah, there's an enormous amount of short squeeze, and that's why the euro can go to 140, 150 before it finally exhausts itself. That's part of the market. Part of the market is to try to. The reason why things become absurd is precisely because there are people on the other side of it who can't believe the absurdity and maintain the position. People would not get short squeezed if they would just simply take their stops, but because they don't take their stops, that's where you get the short squeezes. So I hope you guys had a little bit of a insight into what we do and what I do on a day-to-day basis. I hope you guys follow me on Twitter, and I hope you guys like what I showed you today. We've had tremendous amount of success with this within BK, and I obviously have had good success with it myself. So I'll continue to trade it. I wish you guys the best of luck. As always, if you're interested in BK, it's very simple. I'm going to post the link again. This is the best deal you're going to find we're ever going to offer, so take advantage of it if you want to. And my URL and my Twitter is at FXFlow. Okay? So I wish you guys the best of luck and the best of trading, and I'll see you guys next month. Thanks a lot.